So we've been talking about non-traditional mortgages. We've got one more episode to go where we're going to kind of touch base on some of the other non-traditional mortgages that are out there. In case you didn't know, I'm back with Stacy Flanigan at Angel Oak, and she's going to cover those other non-traditional mortgages that can help those buyers get into those properties. Thanks for coming back, Stacy.
Thanks for having me.
So, what other products do you have out there that doesn't fit the normal traditional little box?
So a lot of times we'll look at loans where they're just missed. You're running DU or LP, and you can't get it approved eligible. And sometimes you might not even know why you can't get it approved eligible, but you just can't make it work conventionally. Those are just missed products. Well, we have an answer for that, a solution for you as well. So we do those just missed for whatever reason. We're not black and white. We don't run DU or LP on our loans. So we just look at the picture as a whole. You know, we look at the borrower, we look at the loan as a whole, and if it makes sense, we're going to do it for you.
So the DU and LP that you're referring to, that's what I go through when I do a traditional mortgage. I have to get the computer to like the loan.
Correct.
And that's basically what the DU and LP is.
Yes.
Well, you don't have to get the computer to like the loan.
No. We have humans that look at the loan.
Oh, how nice. Real people.
We're more gray. We're not black and white.
So that can really help those people. So is that going to help them in credit situations where maybe I can't do it because of a credit delinquency or something along those lines?
Yes, so we actually allow on our programs, we allow them to have a mortgage late in the last 12 months. Life happens. You know, we were worried about getting our kids to school and getting them ready, and life happens. Somebody was sick in the family. So we understand that. So we have that little cushion, if you will. Also bankruptcies. We only have 2 years seasoning on a bankruptcy. And if it was a Chapter 13, we can do 1-day discharge as long as it was filed over 2 years ago. So foreclosure, 1 year seasoning on foreclosure right now.
Oh,
so,
wow.
Again, we understand that things happen in life. But if you're back on track and you're going back and making income and getting your life straightened out, we have options for those borrowers.
I had mentioned in a previous episode that I had a borrower who was selling his house to buy another house, and once it was sold, he was under contract, he was ready to close, they weren't quite ready, they kept getting delayed. Well, he didn't pay the payment. He was like, well, it doesn't matter, I'm selling that house. I couldn't put him in the traditional box.
Yeah.
But you have a solution for that.
We do.
So, Stacy, those instances where people maybe don't have much income, but they have assets.
We have a solution for that one as well. So we have an asset-based program. We have a formula, if you will. And as long as they have enough assets in the bank to cover our formula, we're good. Again, like with our DSCR program, there's no DTI, there's no income, there's no employment listed on the application at all. It's based solely on the assets in the bank. So if they just recently maybe sold a business or won the lottery, a couple of them that we've seen is professional athletes. They don't have 3 years left on their contract, but they have a lot of money in the bank. As long as that money's in there that's been seasoned for 6 months, we have a solution for you.
So when I look at traditional financing and I'm looking at assets, I usually have to figure the assets for the income from the assets for the whole term of the loan. Your formula, if I'm understanding, is a lot easier.
Yes. So when you're doing what you're talking about, that's an asset depletion, where you're depleting the assets over a life expectancy age of a borrower. And you have to have a lot of money in the bank to get a very minimal amount of income per month. Ours isn't like that. Ours is not income based. It's solely based on the assets that they have in the bank.
Stacy, anything else you want to share with us today?
Yeah, I actually wanted to mention that all of our programs in today's market, we see a lot of people looking to buy a house, wanting to get that rental property or get into the dream home. And if they don't get financing, if they don't get closed within a certain number of days, whatever's on their contract, sellers aren't extending. They're taking that EMD and going to the next offer, because we are seeing 5 backup offers sometimes, cash offers behind us, which they know are going to close right away. So we offer delayed financing. And what that means is if a borrower does decide to pay cash or even take out a private mortgage and close quickly on that property, we can turn around and refinance them the very next day to recoup their cash. Because we know if they borrowed against their 401k or their IRA, they're going to pay a penalty if they don't put that money back in there within 60 days. So we can turn around and do delayed financing, and I'm not even going to hit their LTV for a cash out or their rate. I'm going to give them the same LTV as if it was a purchase and the same rate as if it was a purchase. So again, with these backup offers on these houses, it's an option for people not to have to worry about either missing out on their dream home or not being able to put the money back into the market if they decide to take it out to pay cash for a house.
Great option for those borrowers that really want that house. Know they need it in order to get it. They need to use cash. They got the cash, but they need it replenished right away.
Absolutely.
Wonderful, wonderful. Well, you have shared some great options with us. I really want to thank you. You came in and talked to us about the difference between a traditional and a non-traditional loan. You talked to us about programs, a couple of different programs for self-employed borrowers, and programs for investors, for nationals, and even asset-driven programs and life challenge programs.
Yep, absolutely.
Stacy, thank you so much for sharing. It's been great talking with you.
Thank you, you too. I really appreciate you having me.
So be sure to reach out to me with those questions that you have so that we can include those in our Fact or Fiction episodes, and I'll see you next week.